instead of being valued 95% on expectations, you could get it down to 50% on expectations. And the other 50% is tangible assets appreciating in the worst case 20% a year, right? So that's the logic
It's a strong
of a
pitch.
Bitcoin strategy. And of course, it's not a 2% insurance policy.
No.
It's a policy to increase the growth rate of the company by 50 to 100% and decrease the risk by a factor of. If I give you $1 billion and you invest in a diversified portfolio of African real estate companies and equity investments, that's a very inefficient portfolio. If I take the same billion and I pull it into Bitcoin and I eliminate your counterparty risk to every country in Africa and every company and every currency in Africa, that's a much more efficient thing that gives off energy. So I don't see why we wouldn't just keep growing every year forever. There'll be a point when Bitcoin is a 3, 4, 500 trillion dollar asset class. And maybe there's, if I don't know if it'll ever equalize, we'll see. But I mean, this will probably be 1,000 trillion and this will be 500 trillion. And there's still going to be normies. There's still going to be people that are like, I'd rather buy my government bonds,
Right.
or the government told me I had to capitalize my bank on the bonds, or I want to buy this. There's still going to be that. There's always going to be, in my opinion, there's going to be a spread between, say, the S&P. If the S&P is 1515 and Bitcoin is 60 to 60, I think the Bitcoin is tracking toward the S&P, and the S&P is going to track up because the S&P companies will flip the whole Bitcoin.
Yep.